Eric Muathe at Muathe.com. As a follow-up to the previous video on American Express, AXP, now we've seen that on the monthly chart, there is a good likelihood that month to month, this is where it struggles based on the previous sell signals going back to this break here, which coincides with this trend break. And this was the movement of the highs of 2000 or early 2001. We saw that in the previous video, that this break led to a major correction, and there was another break, this break here, corresponding with this RSI break, which was the break of the highs of late 2007 before we go into another bear market type situation during the plunge of 08 and early 09. So we're talking about this drop here. In the current market, we've seen that it recently broke down here in 2014 or early 2015 off the highs here. And now the question, and the big question here is it coming back to stall on the same level on the monthly chart? So that's the big question, and the level we are watching is right here. So how would you approach this type of a situation given that this is a long-term monthly chart? Well, if you want to get the timing right, you have to take a look at the smaller time frames. So let's do that. So let's go here, and we're going to be taking a look at the 3-year monthly. Now the previous chart was data going back to 1990. Now we're going to take a look at a 3-year monthly chart. And what I want to show you here is there's a simple way of approaching this situation. Now we've seen from the monthly chart, long-term picture, that more than likely this is a level where it struggles. But what you can do to narrow down your entry is use this current breakout at about 79.73, which is this closing high in February 2017. So if the stock is breaking out above the recent monthly closing high, you cannot short the stock. But if the breakout fails, then that's a different story. In other words, if this breakout above 79.73 fails here, then given the big picture, you can take a short position on the stock. Also, if you take a look at the daily, right now the stock is up about 5.5% gain for the day. But take a look at the line going back to the recent break level. So there's an RSI break here. This is the movement of the 52-week high. We take that information, and guess what? The stock is coming back intraday and is coming back to test that same level. So again, we see a good question here as to whether it can sustain above this level on a daily chart. And what that means is that based on timing, one can start looking for an opportunity here once this is confirmed as resistance. So from the big picture to the small picture, we are seeing that this could be a timely area to initiate a short position, especially if it fails to hold that monthly buy point. And also, if you take a look at the hourly broke down here, and we can see that corresponded with the RSI breaking down here. So we use our uniformity method, check the description for that, and we can see without any adjustment, the stock is coming back to test that level. So again, we see here, it's a good question as to whether it can hold above this level. Clearly, if we see resistance around this level here, confirmation of resistance on this blue line would suggest that the next swing trade, so once we see confirmation of resistance on this blue line here on the hourly chart, confirmation of resistance there would suggest that now you can initiate your position based on the hourly. We should also correspond with the daily, and that would be one way to time this long-term picture, where we are speculating that here on the monthly chart, this is where we can expect it to stall. And what you do here is you take the big picture and drill down your entry by taking a look at other time frames like the daily, hourly, and even the weekly. And again, keep in mind, if you go back to the 3-year monthly, simple way of looking at this is if this current breakout attempt fails, and let me give you that level one more time, it is 79.73. Failure to move above that level would suggest that the next swing trade or the next major direction is pretty much, in my opinion, going to be down once we see a failed breakout, and confirmation of resistance again on the daily would also be a good confirmation in terms of timing, this resistance level here, and also hour to hour if we see confirmation of resistance on this hourly chart, and looks like right now it is coming back to test that level. Now, one thing I failed to mention is that it is also coming back to test the 69.1 threshold on the RSI level. The last time it tried to move above 69.1 was here. It got rejected and we got this pullback. We are coming back to test the 69.1 threshold again. Failure to hold above that level, failure for this line to be broken to the upside, in other words confirmation of resistance here, would suggest that now again the next major direction after this spike is going to be down. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESC.